In the 6 months leading up to the budget, it was made clear that the country was short of 28 billion rand. And in the budget itself, there are 3 big ticket items which basically made up this amount. The first of these is perhaps controversial, and that is the increase to the top marginal tax rate from 41% to 45%. Now, while this seems a massive step, it's only for those who earn above 1.5 billion rand, and it appears that it will only impact on about 100,000 people across the country. So the impact doesn't affect a lot of people. However, the message that it sends out is very clear. It says clearly that we must redress the wage gap in this country, and that there'll be money taken from the top earners to fund the wage gap down at the bottom. So a very clear message there, and in my opinion, not unexpected at all that we had this increase. I think it was on the cards. There was no real other alternative. VAT was not an alternative at this stage, politically speaking or practically speaking, and this was all that there was left. Another aspect to the increase from 41% to 45% in the top marginal tax rate is what effect this is likely to have. And there has been conjecture that it will lead to top high income earners leaving the country. They are basically very mobile, and this would probably not be difficult. And I think that this is not a danger. One must always take into account what you're leaving and where you're going to. So what are the top marginal rates of the country where they're going to? What are the living conditions? What is the cost of living in those countries? What is just the general way of life in those other countries? And I feel fairly confident in saying that not many of those 100,000 people who are affected by this increase are likely to leave. The other big area of increase to tax revenue was around the question of dividends tax. Up to now, dividends tax has been 15%, and it has been raised from February to 20%. So this has happened already as soon as the law is promulgated. The interesting aspect to dividends tax is that there has been a change made to legislation last year, which has come into effect from the 1st of March, in other words, in a few days' time. And that change affects 3 of the 9 categories of dividends, and it brings the dividend for those 3 categories into remuneration. Remuneration means that those dividends are subject to pay as you earn, and not to the dividends tax of 20%, the new one. And the pay as you earn rate has now increased to 45%. At the time when the law was changed last year, it was still at 41%. So whether that increase to the top marginal rate, which affects these 3 categories of dividends, has been factored into the 6.8 billion rand, which the budget estimates will be brought in by this change to dividends tax, is unknown. I would assume that Treasury did their homework, and the 6.8 billion was factored in around these changes. The last of the big ticket items that make up the 28 billion is the combined effect of increasing fuel levies and sin taxes. The fuel levy is just like the increase to the personal income tax bracket. It's low-hanging fruit. In other words, the change is made and the money just flows in either through the payrolls as far as the top marginal tax rate is concerned, or else through the petrol pumps. It's immediate, it's monthly, the money flows into the fiscus. So the 30-cent increase to the fuel levy was expected to be more. Granted, it does have a direct effect on inflation, cost of foods and all those sorts of things, but I think it's realistically or unexpectedly low under these circumstances. The other aspect, of course, is sin taxes, and this was always expected. Sin taxes have been increased for a number of years, and they've been increased at above inflation rates over those years. So the increases that we've seen to cigarettes and alcohol, wine, sparkling wines, champagne, and so on were of course expected. And the bottom line is, of course, that for the fuel levy increase as well as for the sin tax increase, we have a combined 5.1 billion increase to tax revenue. which is a significant figure. If one then takes the personal tax top rate increase, that's about 16.8 billion rand, coupled to the partial relief for fiscal drag. And then we have 6.8 billion rand for the dividends tax, and we have 5.1 billion rand for the fuel levy and for the sin taxes. All of those add up just about exactly to 28 billion rand. If one looks deeper into the budget, there's a very welcome increase to the tax relief around bursaries. Bursaries are, in my opinion, a very good thing. It's a win-win-win situation. It's good for employers, it's good for employees and their relatives, and it's good for the country. Because basically the tax relief is to incentivize employers to provide training for their employees and the relatives of those employees, and to upskill them. And this, of course, is assisting in the whole educational process in the country. The budget from 2 years ago proposed an increase to the tax relief limits. This was implemented from March 2016, and it's very welcome that they've again made a further increase to those limits. And from March 2017, in other words, a week away, those limits are again going to be raised, and substantially so. This will mean that more relatives of employees can be brought or can have bursaries granted to them, and the employee will get greater tax relief. Specifically, they are targeting tertiary education, in other words, students, and the tax relief there is proposed to go up to 40,000 rand a year that can be provided tax-free to a relative of the employee. And incidentally, this 40,000 rand is not for the family, it is for each child, for each relative of the employee. So if the employer is willing to grant the bursaries, this is a wonderful way for employees to get their children educated, and it applies to both below matric and post-matric education. So it is of extreme value to employees if the employer assists in educating their relatives. And of course, it could have a contribution to the whole Fees Must Fall campaign. Again, if one digs deeper into the budget, you'll find a reference there to travel allowances. Now, the wording is not very clear. What it seems to be saying is that under circumstances where the prescribed rate per kilometre is used, that's now R3.55 per kilometre, combined to there being less than 12,000 business kilometres in the year, then the travel allowance in this respect, and presumably also the travel reimbursement, will be tax-free. One will have to wait to see how this plays out. The devil is going to be in the detail as far as this is concerned. However, what is a little disappointing is that the Payroll Authors Group has proposed to Treasury for a number of years to investigate a travel allowance in principle. This is a very big allowance, the biggest of all allowances. The value a year and a half ago for the country as a whole was 25 billion rand, and there are plenty of problems around the correct and compliant application of travel allowances. Arguably, the compliance rate is not good. You could have easily 10%, maybe 20% of these travel allowances being fraudulently applied, in that they should be salary and they should be taxed at salary rates, whereas they're being taxed at either 20% or 80% in the travel, in the payroll, substantiated by a logbook at the end of the year, and logbooks can be fiddled. So it's an area where there's plenty of abuse, and if 20% of 25 billion is on the table, that's 5 billion rand, and the tax on that is not huge, but it is a considerable amount. So we were disappointed that action hasn't been taken on this. It's been a long-running problem, and there is widespread support for changes to the travel allowance. To wrap up the budget as a whole, and looking of course just at the revenue side of things, it was common knowledge that it was going to be a very difficult budget. The country is in a difficult position. We've gone through a severe drought. The economy is not doing well. There's political turmoil. There's labour turmoil. So to balance the books under those sort of conditions is a fine art. And from the financial point of view, in my opinion, the budget did a very good balancing act to try and compensate for increased revenue as well as not disturbing social issues. And if one considers that roughly 2/3 of the budget on the expenditure side has gone to social issues around education, hospitals, social grants, etc., then one can see that it is a very pro-poor budget, and therefore I think very welcome in our current times in South Africa. However, the other side of the budget, which was extremely positive for me, was the leadership displayed in the budget speech. Pravin Gordhan gave hope and guidance in saying that, and being honest about the fact that we have problems, there's no doubt about it. But he also gave guidance to say that if we all work together, this is Labour, government and business, and we look at the issues in our country, he gave hope and he was extremely confident that we can sort all of these issues out. So to me, that was the main message of the budget, and I'm very positive about it. Thank you.